Welcome to the United States Money Exchange. In this video, we're going to talk a little bit about paper assets and why gold is a little more important to you right now and what we're seeing in the economy. Do you own paper assets? Do you have stocks? Do you have bonds? Do you have a CD? Let's take that CD for example. And now in my opinion, I think a CD is a certificate of depreciation. It doesn't keep up with inflation, and as your money's locked in, you're losing on both sides of that investment. Let me kind of explain to you what I'm talking about. Let's take a hypothetical jumbo CD of about $100,000. Now you go down to the bank, you purchase your CD, you're locked into that CD, let's say for 5 years, okay? Now that initial seed investment of $100,000, it's not going to be worth the same in purchasing power 5 years from now as it was today whenever you put it in. It's just a simple fact with the devaluation of the dollar, and it's getting more rampant as the months go on. Most people are getting less than 1% return on that CD. So in reality, you're not even keeping up with inflation on your return. The government tells us that inflation right now is about 7%. They don't factor in food or energy into that analysis. So true inflation is a lot higher than 7%. So again, you've got that 1% return. You're not keeping up with that 7% inflation. You're losing at least 6% on your return. That's not an investment. You've got that $100,000 locked in for that 5-year period. You will not be able to buy the same 5 years from now with that $100,000 as you are today. So you're losing money on both sides of the fence there. Now, gold over the last 5 years has done almost 400%. So if you would have put money into a CD 5 years ago, let's say you were getting a 5% return. Over 5 years, that's 25% compared to 400. Which way would you like to go? I mean, I think I would rather have a 400% return than a 25% return, or more realistically, a 5% return, because you know you're not getting 1% on those CDs anymore. And it's crazy, but it's the way the banking system works. You know, they take your money, they loan it out. It's called fractional reserve banking. They generate and create more money off of your money, basically out of thin air. If you don't know about fractional reserve banking, go do your homework. It's absolutely crazy. Put your money somewhere where it's going to be safe for you, where you have control of it. It's imperative. I mean, if you've got money in stocks, how well do you know those companies that you're invested in? How debt heavy are they? How is their competition compared to them? I mean, there's a lot of questions that you need to be asking your money market manager or your stockbroker when he's allocating your money into those areas. Now, am I saying move all of your money out of paper assets? No, I'm not telling you to do that. I'm not a stockbroker. I'm not an accountant. You know, I'm a professional at what I do, and that is precious metals. That's what I know. I know the numbers. I run the numbers. Gold is outperforming everything, well, I guess except for silver. But here's the situation. We're in for a bad economic future in this country. It's going to be very, very bad. And if you've got paper assets, like I've said in previous videos, you are tied to the dollar. Now, gold, on the other hand, works completely opposite of paper assets. It has throughout history. Go do your homework. Look, let us educate you. Pick up the phone right now and give us a call. Our toll-free number is 1-877-890-2990. We are here to help you and to educate you. Pick up the phone. Call us. 1-877-890-2990. We will talk to you soon. Have a great day.